Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going to be going out in the first week of February 2021. Now, before I do the usual and switch over to my screen share and walk you through a lot of the charts and ideas for the forthcoming week or two, I think it's very important, due to the number of messages that I get on any given week, just to clarify that the analysis that I'm about to walk through is not geared towards day trading. I think the way that I would probably phrase my approach to the market is I'm a bit of a technical trend follower, technical investing, whatever you want to call it. But bottom line is, technical analysis is something that I see a lot of value in. I think it helps the decision making process enormously. And I'm not in the market for little 50-cent moves or any $1 moves. I want to be in the market for $20, $50, $100, because I understand that this is where the bulk of capital returns really kick in. So hopefully you get some insight from this, and hopefully it helps your process, and hopefully you can make some money off some of the ideas that I'm about to walk through. But I think the analysis itself should be very clear. It should be easy to understand. And hopefully you appreciate the work. So let's switch over to the screen share, let's dive into the charts, and let's see what the market is telling us and what we can expect in the coming weeks. Now, before I get into it, please do pause the video, make sure you're comfortable with that. It basically says that there's not any investment advice, and to do all your own due diligence, don't be silly, all the good stuff. So I think most of you already understand this as well. I'm registered with the CMT Association. I'm slowly working my way towards my chartered status, and technical analysis is something that I'm widely known for. Now, when we did our last video around 5 weeks ago, these were the stocks that were talked about, and this is the performance of the said stocks. Now, I've had so many messages and emails about the last analysis. Thank you to everybody. I cannot respond to everybody, unfortunately, but I do appreciate you, and hopefully January was as kind to everybody else as what it was for us. Now, if you get some value from it, again, feel free to subscribe to our channel. Now, as always, I'm going to spend around 5 minutes just walking through the analysis of the overall market. And then I have around 20 to 25 individual stocks and individual names with clear entry points all laid out, set out for you. I do not use the magical hindsight indicator that I see banded around social media and all the nonsense day trading channels that are out there. But again, hopefully you get some value. So what can we expect going into February? Now, what I want to highlight is seasonality, just very quickly. Last year, we obviously had the market crash. We had a drop in June and we had a drop in September. Now, over the last 70 years, last year was a perfect correlation for seasonality. Now, seasonality isn't a great predictor by any stretch of the imagination. I think the way that I use it is, certainly going into September, I'm always conscious of it. But I think what I want to highlight is going into February this year. I would be quite surprised if we had the seasonality trend continue again in the same way that it did last year. So I think when we lay out the major indices and the major areas of the market, I think what we have to consider here is that it's not a characteristic of a market downtrend that we're pushing and we're breaking out into all-time highs. I think something that I see banded about quite a lot is that the market is massively overbought and we need to have a correction. Now, what I would say to that is that you don't find knowledgeable and accomplished technical analysts calling for corrections, etc., because we understand that the market can keep rallying here. We haven't even reached an overbought condition with RSI. Now, what that tells me is the market still has plenty of room to run higher. And I think when you look at, especially if you're somebody that watches the news and all the nonsense that you see on CNBC, Bloomberg, etc. It tends to be economists that are calling for a crash or a correction because they can't understand valuations, and that's really where the technical analysis versus fundamentals debate really kicks in. But what I prefer to focus on is price, because price tells me when to get out. If you look back at the market crash, which I was able to get most of my clients and members defensive ahead of time, I'm not seeing anything really bearish at the moment. I think last week I had slight concerns because we dipped below the 50 period simple moving average on the Dow. I had concerns that maybe the Dow would lead the market lower, but last week the market rebounded in spectacular fashion. We've got the Russell 2000, the small caps breaking out into new highs. We've got technology again closing weekly all-time highs. If you're somebody out there that's bearish on the market and you're shorting stocks and uptrends, I would suggest that that's a very difficult route to be profitable in the markets. So when we put it all together, when we use the four major averages, we have to arrive at a bullish conclusion. Yes, we're going to have to deal with pullbacks along the way, but pullbacks are perfectly normal. They're part of any structural uptrend. So I would fully expect the market to continue moving higher here. But of course, I do reserve the right to change my thesis on 30 seconds notice that the second price tells me otherwise. Now, I wanted to highlight again the correlation between the US dollar index and the S&P 500. I think this is a chart that is probably alien to many of you watching. What we can see with the chart is what's called an inverse correlation. So, what we're seeing at the moment is, the dollar is declining, but we've got a rising S&P 500. So again, the question I think most analysts have at the moment is, well, kind of what happens if the US dollar index starts to rip higher? What would that mean for equities? That would be a question mark, and that's possibly something that I would look at to maybe force me to reconsider my bullish thesis. But this correlation could come undone at any point, and as somebody based in Europe, I would be very, very happy if the S&P 500 was to rise and the US dollar index was to rise as well. So I think we have to arrive at a bullish conclusion. We've got technology. I got a question mark last week because I posted to social media saying that I expected technology to outperform this week. Exactly what we've seen. This is one of the charts that I use. This is what's called a relative chart. So technology relative to the S&P 500 is in an uptrend, and it has broken out. So again, we put it together. We've got the triple Qs breaking out on an absolute basis, and we've got triple Qs breaking out on a relative basis. I think technology, although it's an area that has moved sideways consistently over the last 6 months, a lot of the mega caps have just done absolutely nothing. I think we're poised to see some outperformance from these areas. Now, I use relative charts in a way that helps me to identify the areas that we want to be allocated to. This is a chart that was provided back in October. I posted this to social media saying that small caps are likely to start outperforming technology, which was the leader at the time. And again, what have we seen? We've seen a massive outperformance from the small caps. We're seeing a decline in volatility. Yes, we had a big advance in volatility a couple of weeks ago, but what's happened? We've started to decline again. So again, looking at the correlation, when we've got spiking volatility, it tends to mean the market's under a little bit of pressure, but when volatility is going down, the market tends to be rising. So I'm looking for further declines in volatility. It would help me sleep easier at night. These are the types of things that I think about on a daily basis. I wish my life on absolutely nobody, but I love what I do. So I keep an eye on volatility. I think it's a very, very important chart. And again, we've got growth versus value. If you are somebody that spends a lot of time watching the nonsense in the media, you'll find a lot of economists calling for a move into value because they can't understand the valuations of growth stocks. Again, I don't want to kind of reopen that debate for those of you that have maybe learned the fundamental game and maybe you're slowly realizing that valuations maybe don't matter as much as what they used to. The way I think about it, when I see a lot of the analysts talking about the economy and how they can't understand valuations, I just see individuals that stopped learning 20 years ago. I think the game has changed. I think it's very much a technical world, and that's how I approach the market, because the chart doesn't lie to me and it takes away the what ifs. Now that leads me into areas of focus over the coming weeks. Now, I do have a lot of charts that I want to go through here, but again, hopefully you get some value and hopefully it gives you some concrete plays that you can do your due diligence on. So we've got the software index breaking out. Now I quite like seeing charts that are breaking out of these bases. You've maybe heard the term, the bigger the base, the higher in space. I firmly believe this. This is part of my work, and I think the technology tech sector, as I alluded to a couple of minutes ago, I think it looks very, very good moving forward. With the XLC, we know the notable holdings here with XLC. We can see that we pulled back, we filled the gap, and we've rallied higher. Again, we're expecting little pullbacks here and there, but ultimately we want to see XLC reach an overbought condition, because that would give us more confidence that we're in a structural long-term uptrend. We've got emerging markets. Now let's just go ahead and call this 40% China. Again, I think we're poised to break out. So what does that mean for the areas of the market that are aligned with China? Well, I do have a couple of names prepared this week, but we're breaking out potentially on an absolute basis, and we are breaking out, in my opinion, on a relative basis as well. If you have been sleeping under a rock for the last few months, clean energy, I can't really emphasize enough just how much you should be doing some due diligence on clean energy. No, I'm not saying go and rush out and buy Tesla and NEO. Go out and find the stocks that you like, the names that you like, the charts that you like. These are just 5 of the holdings. There are many out there, and again, I do have a couple of names prepared. And again, we've got solar. If you've been neglecting the market, I think solar is poised to do really good things, not just in the next week or two, but I think the clean energy move. I think China have made commitments to move towards clean energy, so it's no surprise to me that solar, the clean energy names, the hydrogen names, are all starting to advance higher. And we've got semiconductors as well. I think the semiconductor space is really, really interesting to me at the moment. One of the individual names that I've got on my radar at the moment is Nvidia. Now, Nvidia has earnings next week, and going back to what I was saying a second ago about the bigger the base, the higher in space, these are generally continuation patterns. Now, there's maybe some of you that have been in Nvidia, super frustrating stock over the last 6 months. I would fully accept that and understand that, but I think what technical analysis really helps me to do is just to say, do you know what, Sam, Nvidia's moving sideways. I could probably allocate my capital somewhere else, and if Nvidia does break out, then sure, let's revisit it, or let's buy any significant dip. But I would expect earnings this week to be a catalyst in either direction. Generally, these are continuation patterns, but I would be watching for a breakout above this level. I think, given the pent-up price action, I think it could move. Now, the other thing to say is, if there's any disclosures that I need to make regarding any existing positions or any charts that we have recommended to our clients and members, then I will disclose that. This is one of those disclosures. This was a chart that was recommended to our clients and members on a breakout above 100. It's doing very, very well. You may have heard me say it in the past, pullbacks and uptrends oftentimes offer opportunity. I think the uptrend is intact. I think we've got a logical pullback, and I would fully expect Taiwan Semiconductors to get moving. Now, going back to the relative chart, some of you will be thinking to yourself, well, Sam, why would you recommend Taiwan and not Nvidia a few months ago? Again, this is one of those charts. I like to compare to see which chart or which stock is doing better versus the other. Again, this is the stuff that keeps me up at night. So when we've got Taiwan outperforming Nvidia, we want to be owning Taiwan Semiconductors. I still believe that Taiwan at the moment is the stock to own over the two, but that thesis could change if we see a major breakout with Nvidia. I think Amazon, again, sideways consolidation pattern. This is what's known as an options killer, and I think we're potentially breaking out on the back of positive earnings, I should say. So given the sideways action, we're looking at a triangle pattern, and hopefully Amazon resolves itself to the upside. Square Inc. Now, just to show how I like to approach these technical plays with charts like Square Inc., I don't overcomplicate things. You buy at the bottom of the range, you sell at the top of the range. But for those of you that are maybe holding Square Inc. at the moment, you should really give it an opportunity to break out. If you get a rejection at this level, again, going back to what I was talking about with Nvidia, I don't see the point in holding stocks when they move sideways. I'd rather reallocate capital elsewhere and have my money working for me. So I certainly like Square Inc. above 250. It's a really good stock, tremendous stock, and I think above 250 makes a lot of sense. Now, disclosure, I own this stock. This is a stock that was recommended to our clients and members when we had a breakout on this level. I bought the stock, I've been accumulating, and I think the uptrend is intact. Not terribly high cost stock either as well, but again, you'd expect with any uptrend, you'd expect continuation. Peloton, we've had earnings out the way. From what I understand, it was half decent earnings, nothing to be massively concerned about. It is chopping about sideways, but I don't mind entries, stocks that are just about to touch the 50 period simple moving average. That can quite often be a catalyst to a move higher. It's showing really good relative strength compared to the S&P 500. We've had a pullback in momentum. So again, with earnings out the way, hopefully we can get a catalyst that can give Peloton a move higher. Hopefully a couple of upgrades in the week should do the trick. Disclosure, I own this stock. This was a stock that we sent out an alert to our clients and members on this breakout here. Clearly a massive win this week. We do have a decent short interest. We've got incredible relative strength. What I would like to see with MGNI, I'd like to see a little bit of consolidation here. Let price, give us a little bit of a breather, because I get worried when stocks go vertical. It gives us many headaches. RSI is up at 82. It can go higher. I'd like to see price take a little bit of a breather, and then I'd be quite happy to accumulate further shares in MGNI. But congratulations everybody holding. It's been an incredible move. Salesforce, again, going back to the technology theme. It's a component of the Dow now as well. Again, I think we're in this big range at the moment. Going back to what I was saying about Square Inc., buy at the bottom of the range, sell at the top. Hopefully we get a breakout. But again, I think Salesforce looks good to go. Another disclosure, I own this stock. This was another one that was recommended on this breakout. down here and here. But I think plug power, going back to the hydrogen play, clean energy, we've still got a really big short interest in this one. So don't be surprised if you're out there and you're bearish on plug power. You might start covering soon if we get some momentum coming back in there. I think Alibaba, again, I think we've had earnings out the way, we've had a pullback. Again, I don't mind these when they pull back to the 200 period moving average and we get a bit of a bounce, but I think above 270, and I think Alibaba could really get going. I got a lot of heat actually. I had a couple of emails on this one after an analysis a month ago. I think again a lot of you maybe don't understand technical analysis, and when we use price targets, and I'm calling for a $560 price target, it's because I understand the Fibonacci tool in 12th century mathematics. I think for me, Roku, very, very straightforward. We had a breakout above 370, and once we start to break out above one level, we start to advance to the next level. So again, some of you might disagree with me, and that's okay, because you look at valuations, you're allowed to disagree with me. But ultimately, my 560 target stands on Roku. Bloom Energy, again, clean energy. We've got a decent short interest in this one. Ultimately, the uptrend is intact. We're respecting the 20 period simple moving average. We've got good relative strength. We've got room to run with RSI. So again, I think Bloom Energy is probably a name you want to look at. Now we've got Uber. Now Uber has been in this sideways range. This was a stock that was recommended to our clients and members. Unfortunately, it resulted in a stop out on this decline here. Essentially put in a failed breakout, but what's happened here is it's found support at a logical level of support. We've started to rally. So again, I think above $61, and I think Uber probably starts to move towards 80. We've got MGM above 36. Again, I'm not going to get into the whole debate about the economy and how can you buy MGM because everything's shut down. I don't pay attention to any of that. I like MGM above 36 because that's what price is telling me. It's telling me that people are buying it, so we want to be looking at buying it as well. Kirkland's, again, I covered this a few weeks ago. It's been massive. Again, looking for the next breakout. I think if this moves above 30, I think Kirkland's starts to move higher. It's funny thinking about Kirkland's because I think those of you that have maybe followed me over the last couple of years, you'll know that I used to live in Vancouver, Canada, and I was introduced to Kirkland's because I think they're the company that do the chocolate apricots, which I got massively addicted to. So ever since then, I've actually kept an eye on the stock, and it's good to see it rallying higher. Nuance Communications, again, we're in this sideways range at the moment, and I think if we can get a good move, a good strong move above $51, I think Nuance Communications could be another big tech winner. Chewy, I think everybody's favorite pet online store maybe, but again, just to highlight the bases, we're looking for these breakouts from bases. Bit of a head fake here. We pulled back, but again, it looks to me like we're building another base. Again, that's not a bearish signal for the stock, despite some of you that are maybe bearish on it. Again, Snapchat, I think very, very close to hitting our price target here at 70. I did cover this one back in December on this breakout here. Everything's done exactly as expected. But I would have an eye on the $70 level there. Fiverr, again, we've had a big pullback. Again, just wanting to highlight these Fibonacci levels. Don't ask me how, why the market respects them. The market just does. But again, we've pulled back, and now we're starting to rally higher. And I would have an eye on 317 as my level. very close to breaking out in Sale Point Technologies. Again, we sent an alert out to our members on this breakout here. It's been chopping about sideways. We got most of our members out around here, but again, base, could look at it, double bottom chart pattern possibly, but I think the key thing to take away is it's potentially looking to break out here. Again, we've got a decent short interest on it, so you know, I think that's one that you might want to do some due diligence on. I own Apple. I think most of us probably own Apple in some way or another at the moment. Again, I think we've had a pullback. We've got earnings out the way. We've pulled back to a logical level, and I think Apple path of least resistance is most definitely higher here. Netflix pulled back, filled the gap, and it looks like it's starting to rally higher. Now, I'm not massive on buying stocks when they're in these sideways consolidations, as I've alluded to. But that said, it does look like it's starting to pick up ahead of steam. I think there's room to run with RSI here, so don't be surprised if we get a move from Netflix in the coming few weeks. Pinterest, congrats to everybody that's holding. Again, going back to the Fibonacci theme, we break out here if we get above this $84 level. I would add, I think, the $100 round number. I think those of you that maybe play options, for example, have maybe heard of the $100 roll, where you know you get within spitting distance of $100, price tends to gravitate towards $100. So I would fully expect if Pinterest is to get above this level, it should hopefully test $100, at which point you're probably going to get a little bit of psychological selling, and then that's why the $100 round number barrier, once it's broken, you can always a lot of the time see these fast moves higher. So I would expect a 130 price target if it can get above that $100 level. Nike, again, sideways range. We're just waiting for this breakout here. I think $150. I think above 150. Then again, I think there's a logical 175 target there. Massive congrats to those of you that are holding Teladoc. Again, for those of you that have been following my work over the last few months, I've been highlighting this as a buy, provided it's above the 50 week moving average. Sorry, this is a weekly chart. We had a breakout. Again, I highlighted this one a few weeks ago, and it's had a monster move higher. We're touching $300. I think if it gets above 300, you know, hold on to your hats. You know, those of you that again are going to be wondering why I'm putting such a high price target on it, it's because I understand Fibonacci. So that would be a 475, 478 price target for me. Riot blockchain play on cryptocurrency had a logical pullback, again highlighting mathematics here, nothing. Prices respecting these levels, so I want to be paying attention. We've had a pullback, and I think if we can get above $28, I suspect we go back and we test former highs, and I would have a $45 level there to keep an eye on. Very close to breaking out in Stone Co Limited. Again, I try to pay attention when stocks are chopping about sideways. You know, as you already know, I'm not one to hold for, you know, no reason. I'd rather just have my money, you know, constantly working. But I think if we can get a breakout here, then again, going back to the $100 roll, you know, I'd expect it, you know, to probably breeze through $93 pretty quickly. We've got UPS going back to the sideways range. I like to buy at the bottom, sell at the top. Again, I think 177 would be a level that you would want to keep an eye on. And we also have Celldex Therapeutics. Again, we've got a decent short interest. This is a chart that we highlighted this breakout to our clients and members here. Done very well. Had a bit of a pullback. It's been building a base. And again, we just need to have a look and see how these bases perform. So again, we like it above 25 bucks. So that's really the analysis that I wanted to put out to social media this week. I hope that you've got some value from it. If, however, you are somebody that maybe does struggle a little bit, or maybe somebody that wants to learn technical analysis, feel free to jump on to our website, honeystocks.com. We provide charting research every single weekend. We provide our members and clients with analysis similar to what you've just watched, albeit a shortened version. We also provide a midweek halftime analysis, which is sent out on a Wednesday. We also provide trade ideas to our members. I'll show you what that looks like in a second. We also provide access to a network of investors and traders from all over the world. I don't have a WhatsApp group, or I don't send out anything on text message. I've got a very professional setup. I've got my own app, and everything is housed within our community, and very, very professional setup. But I think what a lot of our members find the value in is charting support. So day in, day out, I'm available during market hours to provide support. So if you need a second opinion on a chart, you can directly message me, and I generally get back within an hour or two. And we also provide completely free of charge. We do not charge for this. We used to charge for it, but you get full access to our technical analysis program with our membership. So if you're somebody that would like to perhaps add structure, you'd like to build, I guess, discipline and maybe a rule set, etc., our technical analysis program helps you to do that. All you need to do is just click on join membership here, and that will take you through. But this is what our alerts look like. This is our recent alert that we sent out for MGNI. As you can see, it's all very, very clear. The analysis makes sense. I don't like to overcomplicate things. This is the original alert that went out for Plug Power, which has done ridiculous things. This is obviously up, it hit 70 bucks. It's obviously down low 60s at the moment, but it's been a massive winner and it's still going. Pen Gaming alert above 78. We're now up at 120, I think, at the moment. United States Steel, for those of you that don't know, that this was breakout at $11. It hit, I think, 100%. It's obviously fallen away since then, but again, this is what I do. This is my life and what I live for. Peloton, again, above $100. So I'm very unique in what I do. I don't know anybody else that does it, but we log every single one of our trade alerts on our website for complete and open transparency. So feel free to go and check out if the types of stocks that we recommend are the types of stocks that you like to buy. We don't recommend penny stocks. We're not day trading. We're not in it for little 50-cent moves. We're not slinging weekly options. If you're somebody that I guess has the capital and you want to be part of a structured environment with a lot of very, very smart, intelligent investors, part of a network, and you want to have access to my technical work, again, feel free to go and check out the website, do all your own due diligence, etc., and see if it's a good fit for you. But to give you an idea of the types of testimonials, the performance, etc., from some of our members. Some of our members trade options. Some of them, most of them, I guess, like me, buy the underlying. But this is a massive return, 240%. We've got Vince here. His second year in a row, his trading account is up 100%. Again, individual, I guess, trade, if you want to call it, again, 874% on options. Again, I mean, I think that's probably not typical. I think, if you're trading options, I think everybody at some point has a win like that. But you know, that's just one. But this is Jamie. Started off 40,000, I think it was, hit 96,000 in I think it was November, December, and now he's up at 160. I think January, I think for most was pretty incredible. But you know, that's the type of interaction that I have, I guess, with our members. Again, going back to X, you know, United States Steel, individual trades 700% on one of our ideas that we put out there. So it's a really, I guess, structured environment full of very smart investors and traders. So I think if you're somebody that wants to get away from day trading, or maybe you're wanting to learn technical analysis, or maybe you're just somebody that's perhaps too busy to filter through thousands of stocks every week, and you know, you've got family, career, business, you know, whatever your deal is, you know, go and check out the website and do some due diligence. But it's only $500 for the year, and I would suggest it's pretty good value, but again, I'll let you make that decision. But if you've stuck around to the end here, from the bottom of my heart, thank you very much for watching, and I hope you have an incredible February. Thanks as always, and I'll pick up with you soon, hopefully.